Today was a vicious day out there in the stock market. How low are stocks likely to go? Yesterday after the bell, Tesla and Google basically set the tone for what was going to be today. Also, Visa had earnings out yesterday. Visa was also down 4%. We take a look at Google. Google was down 5.02%. And let's not forget, today after the bell, we have more earnings coming out. Chipotle, Ford, IBM, and a lot of other companies reporting earnings today. And we look at the expected movers. Really, IBM is the big mover, plus or minus 6%. Are we going to see a rebound in the markets tomorrow? Or is stocks going to continue to crumble lower? We look at the volatility index up 24.34% on the session. And this is what I warn you guys about time and time again. When the VIX was near 52-week lows, be on the lookout for unexpected volatility spikes in the market. And that's exactly what we're seeing right here, right now. We look at the fear and greed index. We swung all the way back over into fear territory. And today we had new home sales come out and they fall to 7-month low in June as affordability remains strained. Now, it's only a matter of time. We have been seeing cracks for some time with the economic data that's been coming out. But the question is, how far are we likely to drop? Keep in mind, the NASDAQ was able to take out the B point. We had a nasty gap down lower today, and I have a little bit of bad news that I'm going to share tonight during the live stream. However, we had a major gap down. We never had a bounce. MACD indicator getting obliterated, a good separation of the lines, showing no signs of pulling back at this moment. We come down, look at the MACD indicator on the 1-hour chart, showing no signs of letting up. Then on the 30-minute chart, we see the MACD indicator is starting to try to base out. Will we start to see some of these levels come back and get tested? In this morning's video, what did I warn you guys about? I said, if you want to go long, trying to fade the gap, wait and see, can we break the low out here from last week, last Friday, and then start to get back above it? Well, we broke the low. Did we ever get back above it? No. Every single 30-minute candle today was red, except for one. We had one green 30-minute candle. And if you look at that candle, we actually had a wick on top of that candle. It was a very bearish day in the market. When we come back over and we look at the daily chart real quick, I want to go ahead and measure, because keep in mind, it's not uncommon to get a 10% correction in the market. If the NASDAQ fulfills the ABC pattern to the downside, that would be 10%. However, I want you guys to focus on this minus development area. If we overshoot the 100% ABC projection, watch out for 449.94. That will be a point of interest we want to look for and see, do we potentially get a bounce up and out of that area? Now today, we saw the dollar index was actually down 8 cents, but we have a hammer candle on that. Now, if the dollar starts to show signs of strength while the overall market is selling off, that is going to be more problematic for us. Then we look at the 10-year yield. 10-year yield on the rise again today. When the 10-year yield is on the rise, that is problematic. Today, we saw Tesla was actually down 12.5%. And if we look, Tesla has now almost filled two of these gaps. Is Tesla going to be able to come back and fill the gaps? We look at Apple, absolutely getting destroyed today as well, down $6.49. And watch out for this area at 213.65. This could be the area of attraction out here for Apple, and even Nvidia and the other AI stocks. Nvidia almost completing the ABC pattern to the downside that we've been watching over the past couple days or so, where Nvidia was down 6.66%. We take a look at SMCI. SMCI was down 9.1%. And look what we've had. We've had this consolidation. Now we are starting to break below it. Are we now going to see SMCI make its way down towards 563? Or potentially lower? Keep in mind, when fear enters the market, like we're seeing right now, and it's very evident with the VIX, things can get pushed a lot further than what a lot of people out there believe. Now, we look at the economic calendar for tomorrow. Keep in mind, tomorrow at 8:30, we have advanced GDP numbers coming out. We have the weekly unemployment claims. We have core durable good orders coming out. And that is a lot of potential market moving events out here for tomorrow. So tomorrow, be very mindful of the 8:30 news item. Now, here's going to be a big warning sign everybody wants to pay attention to. Look at the yield curve. We've been warning about this for quite some time. When the yield curve uninverts, bad things tend to happen. And once we get right up here, the yield curve will officially be uninverted. And that's when big trouble comes into the stock market. So we got to pay attention. If you think a major sell-off, a stock market crash is about to be underway, watch for this to come uninverted. Once the yield curve is uninverted, all bets are off. The stock market is going substantially lower. Now, if we come over, we look at the diamonds, the DIA, look where we're at right here at the 50% Fibonacci level. Do we start to firm up and bounce? And what I want to warn you guys about is Look at the MACD indicator. It has not even crossed to the downside yet. We come over and look at the Russell 2000. It tried to show some strength early on, but ultimately it succumbed as well. And if you look, the MACD indicator on the daily chart for the Russell is not even starting to cross over at this moment. Now, when we come over and look at the NASDAQ on the futures markets, notice we came right into the minus development area. We came all the way to the next volume area. We made it past the next minus development area. We took out the gap. We went ahead and we filled in that minus development area on the weekly profile as well. Now the question is, are we going to start to get a bounce up? And if we start to bounce, how high could that bounce potentially take us? One thing I would want to go ahead and look at would be pull a Fibonacci retracement from this last leg down. This has been a straight leg down. At some point, we'll probably bounce back up. Now, right around the 50% level kind of makes sense to me because that's very near the swing point that we had over here. Somewhere about 19,628 to about 19,680-ish is an area that I would be highly interested in seeing the NASDAQ bounce up towards. However, that doesn't mean it's going to take shape. And if you look, we've had 1, 2, 3, 4, 5, 6, 7, 8 consecutive 4-hour candles, all closing in the red. That is very bearish. Now, at some point, like I said, we will get a bounce in the market. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, pass in as little as 1 day. And you can also get a 150K account for only $40. You get a 250K account for only $40. You get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. When we come over here and we look at the daily profiles, notice we had a 714 point range from the high all the way down towards the low. And you might say, well, Mike, we are down more than that today at the lows. Yes, but it really depends on when you look at when the markets close. When you actually look, value area low comes in at 19,186.50. The point of control is going to be right here at a price point of 19,236.00. And value area high is going to be up here at 19,515.50. Now, keep in mind, we were also able to take out that untested point of control at 19,318.50. Now, I am favoring a bounce. However, I want to preface this. If we come back below value area low, I'm going to negate that thesis and I'm going to say, you know what? I'm wrong. I got to be on the long side of the markets. Now, when we come over and look at how the markets fared, the Dow was down 500 points. The NASDAQ was down 654 points. The S&P 500 was down 2.31 points. The Russell 2000 was down 2.12 points. Now, if you look at advancing issues versus declining, 78% of issues were declining with 19.1 were advancing. We come over and look at the sectors. Not every sector was in the red. We had healthcare and utilities actually able to eke out a gain, and both of those could also be seen as defensive, which is really no surprise given how the markets traded out there today. It was sell, 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 and let's sell a little bit more. Now, look at the SPY on the daily chart. The MACD indicator, we're still way above the zero line, and we have not hit the ABC pattern yet. That comes in about 539.22. Also, if we measure from the high down here to the ABC projection, that's going to be about a 4.5% drop on the way down. It's not uncommon to see the S&P drop 5% roughly 3 times per year. And about every 12 to 18 months, we have a correction of 10%. Now, is this going to be one of those times where we actually see a 10% correction or even more? I've been warning you guys about this for quite some time that we are going to see a drop in the market. There are too many negative signs out there. It's only a matter of time. Now, the question we have to ask ourselves, is this the beginning of it? Or is this just a little bit of shakeup with the recent earnings that we've had out and all the drama going on with the election cycle? We come out here and look at the 1-hour chart. MACD indicator is still showing no signs of letting up. And you can see every candle was red today except for one measly little green candle on the 1-hour chart. On the 30-minute chart, we only had one green candle as well. We gapped lower and we just kept drifting lower throughout the day. And I got to warn you guys, this is not my favorite type of day to trade. Yes, I like shorting the market. Yes, I like going long the market, but when we just go in one direction, that's kind of my kryptonite. I have a very hard time trading, and that's what I'm going to share with you guys tonight during the live stream. Now, when we come over and we look at the S&P 500, notice we have a big wick on the bottom of this candle. Are we going to start to make our way up towards this high volume area? And keep in mind, that was a prior untested point of control. We have broken below it. We came into another minus development area. Are we going to start to get a bounce back up? We also have a structure level right here that we have broken down from right here at 55.42. You can see we sliced right through it. The market has failed to come back and test that level. Now, it doesn't mean it's not going to test it. It just means it hasn't happened yet. And the fact that we have this hammer candle, it kind of makes sense that maybe we're going to try to firm up here just a bit. When we go ahead and we measure a Fibonacci retracement level, look, the 50% level comes right around that area as well. So that's more confluence saying, you know what? That could be an attraction point for the market. And that's something I most certainly want to pay attention to moving forward. Then as we come over and look at, you can see we have this candle of indecision, big wick down, and we're closing below value area low. Now value area low comes in at 5490.25. The point of control will be up here at 5506.75. Value area high will be 5566.75. So how do I want to play this? Well, it's going to be very simple. Tonight I'm going to want to go ahead and try to target value area low. If we get above it, then I want to target the point of control. Then I want to see, can we target some of these other distribution areas within the profile? But if we start breaking above value area low, then we start coming back down. You know what? I need to go ahead and take off my bull hat, put the bear hat back on. You say, you know what? It's time to sell the markets. It's time to go ahead and participate. How low could we potentially go? Because when we zoom out the 4-hour chart, notice where the next high volume area is below us. That comes in about 54.31. That would be the next area I would expect us to come down towards. And like I say all the time, whenever we first come into a minus development area, I expect or try to have a reaction. And then if we come back down a second or third time, that's when I expect that area to drop. So if we do come back down into this area again, watch out. There could be a lot more selling. And like I said earlier, we still have a lot of companies that have to report their earnings. Have we already hit peak earnings? Let me know your thoughts in the comment section down below. If you guys want to learn how to trade volume profile using order flow, watch this video right here.